Microsoft and Apple exist. Android and Apple exist. Microsoft and Google exist. And they all have products that do the same thing, but they have different segments and different users. So if you are a non-corporate millennial, you'll use Google. Google Sheets, Gmail, all of that. If you're a corporate, worked in a corporate, you will 100% use Microsoft, unless you're in the media industry. Every single bank, financial institution on earth uses Microsoft.
Yeah.
Why? Because you don't get fired for it.
Yeah.
They don't want that as a risk.
Yeah.
Apple is like, well, it became, this is the cool kids brand. This is more retail. This is, it was a way of showing status, but it was, it was great design. It did different things. So if you really simply put it, Solana may well be Apple, or you could put the Solana and Sui as these are the kind of apples. Is that going to replace Microsoft? No.
Raoul Pal claims a Solana competitor is his favorite. Paul says that if he had to have a favorite, the Sui Layer 1 chain would seem preferable. The Real Vision CEO shares a chart comparing Sui USD to Solana USD, in which the Sui USD pair looks poised to break above resistance. Paul isn't the only analyst bullish on the Solana competitor. Crypto trader Michael van de Poppe also said that Sui is increasingly being adopted as a decentralized finance network, particularly for Bitcoin staking and lending, Bitcoin DeFi. Once markets start to rise again, capital will return to those who have shown strong performance. Sui is one of them. According to Raoul Pal, the main reason why you should have both Sui Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
We know that every financial institution on earth is going to build on this. We know that all assets are going to go onto this. So are the corporations likely to choose Ethereum or something on EVM? Yes. So my view is people are over worried. They're mid-curving it.
Yeah.
Is Ethereum as an ecosystem faster and cheaper than it was? Yes. Is it perfect because, does it accrue to the token holders of Ethereum? Maybe that's not right yet, unless those layer twos get really massive. That could happen too. You stick all of equities on a layer two, you're going to generate all of the thing. So that's how I think about it right now. I think there's space for different types and different use cases, and Bitcoin is entirely separate because almost all of the applications layer has failed on Bitcoin. Yes, there's some NFTs and there's some Lightning transactions for payments, but really, even when you come here, all of the Adia and Adic and all of these guys, they're all like, it's a store of value.
Yeah.
Tech stocks and crypto correlated, but because of the exponentiality of adoption effects, crypto just does this. So the gains compound much faster. So in a portfolio, in a diversified, broad pension portfolio, it actually is highly accretive because you need to have little of it to drive huge performance returns.
Okay.
Now, everything else is lagged because there's a domino effect of liquidity. Right, if you're saying it's a 5-year time horizon, I'm saving for my future because I want to buy a house or whatever, this region, everyone's very young. So, what is your goal? So if you truly are longer term, then it doesn't matter when you start. What it matters is when there are bear markets that you add during the bear market.
Participate,
because you compound returns so much faster.
Paul presented his new bullish and bearish scenario for the cryptocurrency market, including a shocking Solana price prediction, suggesting Solana could reach $1,000. Recently, Paul shared his opinion on the cryptocurrency boom, touting Solana as the growth driver for Ethereum for this 2021 cycle, with a 5x or 10x increase from its current price. If we replicate what Ethereum did in the last cycle, we get a 45x increase from its low. So we're already at about $500, Paul said. And it simply depends on the market structure. In the event of a bubble, the price would reach $1,000. If it shifts to the left, it'll reach $500. That's it. On the contrary, Paul fears a mid-cycle drop of more than 50%, followed by a gigantic surge, reminiscent of Bitcoin's 40% drop in 2020, which would exhaust retail investors around the Bitcoin halving. While the current landscape is seeing significant inflows into Bitcoin ETFs, questions remain about potential outflows heading into the macroeconomic summer. There is also the specter of high inflation and increasing market manipulation by cryptocurrencies. Paul recommends thinking about buying when everyone else is selling. The big risk from that era remains just as great today, the fear of missing out. The fear of missing out is a lure in a bear market. Paul says Solana should outperform Ethereum this cycle, but SUI could potentially do even better. SUI is expected to outperform not only Solana and Ethereum, but also Bitcoin. According to him, Ethereum would start to outperform Bitcoin for the remainder of the cycle, but would underperform Solana, and Solana would underperform SUI, as SUI is in its final phase of adoption. Paul says Ethereum's outperformance versus Bitcoin will be partly due to the fact that the cryptocurrency cycle has entered a risk-on phase. Decentralized finance utility tokens are starting to offer yields or rewards from the underlying protocol, creating value for the network. Most of this value is in Ethereum. Traditional finance will likely start to develop larger use cases, but on the most proven and adopted chain. Think of Ethereum as the Microsoft of Web3. No one gets fired for using it. These two factors alone can significantly increase the value of Ethereum and offset the current retail adoption on other chains, and Ethereum yields will attract more institutions. At SUI Basecamp, Raoul Pal delivered a signature keynote address describing the current cryptocurrency market environment as the beginning of what he called a liquidity supercycle, with Bitcoin potentially reaching $450,000 before its end. Bitcoin's annual rate of change is driven by financial conditions with a 3-month lag, Paul said, highlighting the remarkably consistent correlation between total global liquidity and the price movements of major assets. The correlation between Bitcoin and global liquidity is 90%, and with the NASDAQ, 95%. It's hard to argue otherwise. Paul called Bitcoin the best performing asset in financial history, citing a 27.5 million return since 2012 and an average annualized return of 130%, despite massive drawdowns. Nothing has ever come close, he said, before comparing its performance to Ethereum 113% and Solana 142%, though he noted that Solana's data covers a shorter period. More broadly, Paul believes we are entering the banana zone, a term he uses to refer to the high-speed phase of the cryptocurrency cycle, where prices rise sharply. All cycles are the same: break, retest, banana zone. We had a banana 1, corrective zone, and banana zone phase 2, and now it's banana 3. He believes the current situation is exceptionally strong due to a combination of factors: a synchronized expansion in global liquidity, a weaker dollar, the start of monetary easing by central banks, and the underexposure of individuals and institutions to risky assets. Paul predicts that this cycle could extend into the first or second quarter of 2026, especially if the political dynamics surrounding a potential Trump re-election further exacerbate the liquidity cycle. A recent analysis by crypto data analytics firm Swissblock highlights a compelling trend. Ethereum has shown remarkable strength over the past month. Specifically, Ethereum is up 46% over the past 30 days. This performance vastly outpaces Bitcoin's gains over the same period. This relative strength of the second largest cryptocurrency is often considered a significant market indicator. Bitcoin's fluctuations generally set the tone for the broader market. But when Ethereum begins to show independent strength and outperform Bitcoin, it suggests a potential capital rotation toward the lower end of the market cap scale. The Ethereum-Bitcoin ratio is a key barometer of market sentiment toward altcoins. An upward trend in this ratio often indicates increased confidence and interest in Ethereum and, by extension, the altcoin market as a whole.